Good afternoon and welcome to the first Wealth of Advice market update of 2021, recorded on Sunday the 10th of January. Hope you've all had a good Christmas break and are enjoying yet another lockdown period we find ourselves entering into. Our office is now reopened, albeit with a very skeleton staff, shall we say, physically going into the office due to the restrictions. So we've got one person going in on a daily basis to man the phones and someone else to check the post and deal with it. So we will be working as ever very hard on your behalf to get everything done that we need to do for you. But like vast majority of people up and down the country, we will be working from home. Doesn't cause us that much problems. We've got a lot of practice in during the first lockdown, so it's back to business as usual, albeit that we will be conducting a lot of our client reviews via Zoom, via telephone, Teams, however you choose to do it. We just obviously can't have any meetings in the office right now. The theme of today's update is lots to look forward to in 2021. Everything that we wanted to happen at the end of 2020 to make your investments in pension fund values and such like go up has really happened. Boris got a deal. Whether that deal's good or bad, we don't need to get into at this stage. We'll find that out in due course. But the chaos that would have potentially happened if no deal had occurred has been averted. Talking of chaos, Donald Trump's presidency comes to an end in 10 days' time. He got his supporters to raid the Capitol building on Tuesday, which caused all sorts of chaos in America, which was it was quite mind-blowing to see the people storming the steps of the Capitol building, getting in there. So that's a chaotic presidency which coming to an end. Hopefully that will calm world markets down. Hopefully the Biden government will try and restore some order, so to speak, and the market should like that. And the third thing to be totally pleased about, if you like, is the fact that we do have a vaccine that's being rolled out. If you think back to February and March of last year when people were talking about vaccines, some people were saying it could be 3 to 5 years in the future, certainly not within 12 months to starting to roll out. Depending on which politician you listen to, it may be the end of April, it may be the end of autumn by the time everyone in the country gets it. But our country and all the major countries around the world are now vaccinating their residents, which is great. It means that as the month goes on throughout the year, that the economies around the world will start working again. And 2021, because 2020 was such a bad year from a growth point of view, it was negative. 2021 has to be positive and there should be some good growth to come. So the main news to cover off this week, obviously markets are quite buoyant on the news that a vaccine is being rolled out, and the markets are hopeful that this will lead to a big recovery later in 2021. So you should certainly keep an eye on the market volatility still in the next few weeks and months, as we may encounter hiccups along the way with the vaccine being rolled out. But once it's shown to be a success and more people get it, the markets will rise. The government's announced a £4.5 billion package to support those businesses affected in the retail, hospitality and leisure sector, obviously an area decimated by the fact that they just couldn't trade with customers as all these lockdown restrictions were imposed and the different tiers became more and more, they started inventing new tiers, didn't they? Oil price is now at an 11-month high. This is a good thing. This shows that the markets around the world, trade is starting to pick back up, markets are starting to recover. So a higher oil price is going to be good for your investments. You remember we've spoke about this at length over the last 10 months. The FTSE 100, which has underperformed other sectors around the world, is full of big oil companies. So an increase in oil price will really be positive for the UK stock market. In US news, as we mentioned at the top of this presentation, Donald Trump and the end of his presidency is dominating everything. Just over a week ago, he was caught on an hour-long conversation asking the officials in Georgia to fine him another 12,000 votes to obviously help him win the election. Still believing that he had a chance of overturning it. We all think that obviously came, any hope he may have had came to a crashing end on Tuesday when his supporters, following a rally he had himself in Washington, stormed the Capitol building to try and prevent the Electoral College pretty much ratifying the general election from November. Although it was delayed for a few hours until they got the scenes of chaos under control, it was confirmed later on the evening that he got enough Electoral College votes for Mr. Biden to become president. This now brings us on to what may happen next in the US, because you have a Democrat in power, and they've also won 2 additional seats in Georgia, which had to be redone after the last election. There was like a playoff, so to speak, a runoff as they call it, to get these last 2 seats sorted out. Well, the Democrats have now got power in all 3 houses, so we are expecting what's being described as a blue wave. One of the main things will be a great fiscal stimulus to help restart the US economy. If the US economy gets a good kickstart, everyone starts getting these stimulus payments in their pockets very soon, you should see the markets kind of jump. I mean, the stimulus bill that was agreed only a week or so ago, the markets responded that positively. The Dow Jones hit an all-time high again earlier on this week, so that's definitely something to be positive about as we move into 2021. So the final part of our regular update looks at different graphs to show performance of how the various indices have performed. So the first one I thought we'd put up was just to show you the 12-month performance of the main 3 stock markets, which we've quoted many times over the last year. As you can see, the American market last year, 15.94% growth over 12 months, absolutely fantastic. The MSCI World Index, and if you think back to previous presentations, there was a much wider gap between the US market and the world markets. Again, as the vaccine starts to be rolled out, you will see other economies and other countries do very well, so they'll catch up to America. The growth in America was all about the big technology companies, as we've said lots of times, and then the UK, they're minus 6% over that 12-month period. The FTSE 100 has had a bad year, we know this. Again, just to re-emphasize, lots of oil companies on there, oil prices now going up, so the FTSE 100 should have a better 2021. The next graph looks at the markets, those same indices over a much shorter period. So from the 1st of November onwards, when we started realizing that a Brexit deal was likely to happen, yes, there was lots of stuff in the press that it might not happen. Even as we got into late December, there was worries about that. But the markets believed something was going to happen, and a no deal probably wasn't as negative as we thought. And obviously the big kicker to all of this was the rollout of the vaccine, or the vaccine being approved, ready for rollout. So the FTSE 100, which over a 12-month period was the worst performing index of the 3 quarters, since November the 1st is up 23.5%. So if you're a lucky individual who managed to invest your money, or you did a pension transfer or whatever, and your funds landed early November, you're looking in a very good position. But all of those 3 indexes on there, you can see have done very well over that short period of time. The table that you see on your screen now, we call it the patchwork quilt of performance, shows all the asset class performances of all the major things that you can invest your money into, and which has performed better than others over the last decade. You've got like a league table there of the top 10 performing asset classes. So it's interesting to see that for 2 consecutive years, global stocks was the best performing asset class. International gilts and government gilts not far behind. Now, government gilts are supposedly the lowest risk asset class you can put your money into, because they are backed by governments, so it's a kind of a risk-free return in many senses. You then have corporate bonds, global high yield bonds, cash being the 6th best performing asset class there. Now, if you think cash, interest rates are virtually zero, so for cash to be so high up is absolutely incredible. And then you look down the bottom end of it, UK stocks had a terrible year last year. UK stocks was the worst performing one in 2018 as well. But if you then look what happens after, if you go from 2018 to 2019, the UK stocks then really rebounded and performed well the year after. So it's an absolute lottery to try and predict which order this is going to be in 12 months time. I'm sure we'll do an update for you then to show you what the 2021 stocks were. But just rest assured that all of the major portfolios that we invest our clients into, no matter who the provider is, we'll be looking at which asset classes are the best places to have your money in the coming weeks and months, and they will be monitoring, reviewing and changing these as time goes on. The next table shows when the FTSE 100 falls over by over 30%, which it did in 2020, how long it takes to recover on average to the pre-crash levels. The average normally is 25 months to recover. So if you think it happened in February going into March, so it's only 10 months ago that it's actually happened, on average it would take another 15 months to get back above those levels. Personally, I mean, as I say, I don't have a crystal ball. However, if you look at how the FTSE's done in the last sort of couple of weeks alone, when the Brexit deal got sorted, and as I say, we move on from there, we get the vaccine rolled out, I believe that this recovery of the FTSE 100 will be much quicker than the 25 months that it normally takes on average. But again, it just re-emphasizes the point that when your assets fall in value and you look at the monetary value of what you've got invested, things will always recover. No matter how bad the crisis feels at the time, no matter what the situation is, markets tend to recover. The thing that is fueling the markets right now is all of the stimulus packages that governments around the world have put at play, if you like, to bring the markets back up. There's so much money and so much liquidity out there. Interest rates are virtually zero. So that money eventually has to end back into the markets, and asset prices will increase as a result. As mentioned on previous updates, as well as looking at various stock market indexes, it's also worth looking at how the UK currencies perform to see what's going on in the world. As you can see there, the pound fell off a cliff at the end of March when we compared against the dollar, and when you look at it compared against the euro. From the end of March, it has recovered nicely. The pound is now against the dollar at 3-year highs. It's up to $1.35, 36, depending on which day of the week you're looking at it. But that's a very, very good rebound on there. As the vaccine starts to be rolled out around the world, the dollar should weaken, because the dollar is the safe haven currency of the world. It's where big, huge billionaires will put their money for safety. So as the vaccine gets rolled out, you will see people move money out of the dollar, maybe go back into currencies like the pound. Long term, we need a stronger pound for lots of reasons. The pound against the euro is the next graph we're showing. €1.10. When the euro was launched, it was €1.40, so we've still got a long way to get back to those levels there. But again, as we see the effects of a Brexit deal in action, what goes on with the UK, how it agrees trade deals with other countries around the world, how it trades with the euro, it'll be very interesting to see if this does actually recover. And you never know, the increasing value of the euro might offset some of the other expenses people who go on holiday into Europe are going to incur as a result of some of the clauses of the Brexit deal which was agreed, which a lot of people might not be aware of, but you're going to have to pay for visas, your travel insurance is going to be a little bit higher. So really, if you do want to go holidaying in Europe, you need the pound to recover. But from our clients' point of view and our investments' point of view, a strong pound is generally seen as going to be good for your investments and pensions. So that brings us to the end of another Wealth of Advice update. Thanks for listening. We know 2020 was a bad year for lots and lots of reasons. 2021 hasn't started in the best way for many people. The restrictions, the lockdown, the tiers being increased, the snow, the bad weather. But we're sure that as time goes on, things will improve. Again, if you need anything from us, please don't hesitate to get in touch, and we'll look forward to helping you. Thanks for choosing to watch this video from Wealth of Advice on YouTube. If you liked what you saw, please click the thumbs up. We'll be adding lots of informative videos about finance and investment over the coming weeks. So if you'd like to be informed, please click subscribe. To watch any of our other videos right now, please click any of the links you see around the screen. Thanks again for watching, and goodbye.